So we have a new episode of Legends and Leaders, and today it's great to have Reid here. Reid, you're the co-founder of Superstate. You're somebody who's got a lot of experience leading product, managing product. You were the head of product at Chime for a bit. You've been involved in product. You've been involved in at Square, and you've just been really interested recently in how do you kind of change up and have a different type of structure when it comes to like financial infrastructure? Like how do you go and lay the groundwork for that for the next phase of what it should be? And what you're creating at Superstate is really interesting because it tokenizes and provides a competitive advantage now that maybe wasn't present for certain types of assets that are tokenized. And you guys are leading the wave with this and already have a fund that I think is close to $100 million in assets with this model. So I'm excited to have you here and to get into your story.
Thanks very much for having me, Ben.
Awesome. So where did your passion for like business leadership, technology kind of begin? Was this something you always thought you were going to do when you were young? How did you kind of take this first foray into like this world of startups?
Good question. I think I'm generally an impatient person. I have a low tolerance for stagnation, for things being slow, for arbitrary rules. And so as you kind of go through a career, you encounter these types of things at institutions, kind of at every age. It could be in school, it could be in corporations, could be at an internship when you're a freshman in college or something like that. So for me, it was really kind of an evolution of getting a little bit tired of working on someone else's problem and wanting to be able to just decide what problem I wanted to focus on and go out and build the solution and do this by building businesses, by building products. From my perspective, it's one of the highest leverage things you can do with your time is create a business and go about solving a real problem for customers.
Mm-hmm. So how did you kind of you decided, I think early on to start like a social debate platform. And that was like, pretty much more earlier on. Why did you kind of land on this idea as like an early venture into the world of, building a company?
That was wow. I have not thought about that company in so long. We didn't even work on it for that long. But the idea of this was way back in this would have been like 2010, maybe 2009. That sounds right. It was I was working on it actually with a cousin of mine who now is at Blue Sky. So that kind of social media seemed to just continue to go forward. For us, it was really just a desire to introduce a more tame debate format for those that wanted to debate. Comments even then were still a little bit spicy and getting increasingly spicier on places like YouTube or even Twitter was around at that point. So it was really just, is there a way, are there mechanisms that can be produced to where there can be a more thoughtful, fulsome debates online? Reddit has its moments that are great as well. So that's kind of where we started. Just kind of when you're looking at Fathom, thinking, is there maybe a better format to introduce more long form debates for those who want to participate in those types of things? Didn't really work on it that long, but it was just kind of a fun idea that we had to try to go out and solve it.
Mm-hmm. So then I think a little bit later, you decided to move towards creating Sales Beach, and you wanted to kind of, focus on creating like a sales automation and like analytics SaaS platform for B2B companies. How did you kind of evolve towards that? And what did you really learn overall from your experience with the social debate platform and the Sales Beach that helped, lead towards what you're building now?
Yeah. They're all very different stages in the career. So kind of learned a lot, had different skills or experiences to use at different times. Sales Beach was actually, interestingly enough, born out of another company called Safe Shepherd, where we were looking to try to improve email automation out to potential clients or customers. And Sales Beach was kind of emerged as a solution. It was initially really just kind of an internal tool. And we suddenly realized that this thing may be actually useful enough to be its own product, its own business. And so we then spun it out and really gave it a good effort to see, is that going to really work? Email marketing campaigns were really starting to kick up at that time, with a lot of competitors in that space, places like Close.io, Outreach, others, and it was a better project than Fathom in the sense of Fathom was more of like, this is a fun idea for me, versus Sales Beach was, this is a good solution to a real problem. That being said, still couldn't really get it off the ground too far. Definitely had customers and revenue, but nothing that we really thought was meaningful enough to really carry forward. So I think the big difference between, I think, those two businesses was really just, was there a real problem to be solved? Was there a real market? And then ultimately, did we have the wherewithal to actually, bring together the resources to actually build it successfully and compete in what was increasingly a more competitive marketplace? It kind of brings to Compound and Superstate, where I think we now have, or I and those that I work with have, that sort of wherewithal to be able to actually harness resources, our own and others, to really actually manifest edges, to dig out moats, and really create a competitive product that's actually going to be compelling to the customer.
Mm-hmm. So, Reid, how did you kind of land on this idea for Superstate? And the idea of tokenized assets has been around for a little bit, but why did you decide that, hey, we should be the ones that really implement this? And how did you even go about starting that?
Great question. This actually is a little bit of an iteration of what we had built previously at Compound. I joined Compound to build Compound Treasury, which was really an institutional compliant wrapper for institutions like corporate treasuries to be able to access the yield being generated by the DeFi protocol Compound without having to really touch it directly. That was very compelling for quite some time. Then the interest rates flipped between TradFi and DeFi in 2022, given all the events of that year, where that product was just no longer that exciting. The yield we were able to produce wasn't really high enough, what someone could get with traditional finance. And then the product's risk profile just didn't really add up. So we began to kind of look around on, where's the market heading? What are these? What are people going to want next? Whether they're crypto native, whether they're crypto agnostic, whether they're kind of crypto curious. And we had a few ideas we started to kind of poke at, but more and more we just looked at how valuable stablecoins are, the reality of the stablecoins being backed by cash or cash equivalents that generate yield, but that yield is kept by the issuer and not passed on to the holder. And a growing recognition that if we want blockchains to be adopted more widely, there needs to be not just pure crypto native assets and yield on, but the ability to bring off-chain yield and assets on-chain and gift them the superpowers of crypto and blockchain. So that's really where the idea came from. It was really a continuation of how do we make markets and assets widely more efficient, widely more powerful using blockchain and crypto. And Superstate, being an asset manager, building tokenized funds, initially with this U.S. government treasuries fund, kind of the first effort to prove that out.
Mm-hmm. And why did you decide to start with a U.S. government's treasury fund? Why was that kind of the ideal place?
Really, it's such a ubiquitous asset. It is a well understood asset. It is a very safe asset. It's stable. It has very deep liquidity, and it is an asset that is there's a lot of demand for right now on and off chain, given the yield being generated from a short term government debt. So from our perspective, it was kind of a no brainer. If we're going to try to bring a traditional asset on chain, or at least the yield of that asset on chain, then the best one to go after would be the one that is highest demand with the most liquidity and the broadest market.
So when convincing investors to raise capital for what we were building, what really helped you push them over the top? Was it the fact that, hey, did you explain to them the competitive advantages of tokenized assets? Was it the approach of a more safer type of asset class, starting with the U.S. Treasury, or what kind of pushed them over the top to want to back you guys?
It's been a bit of an iterative journey. So, when we first were raising funds for Superstate from our VC backers, we really just had the initial idea of an asset manager that produces, that's able to spin up a variety of funds, accommodating a different investor desires or demands, whether it's a risk profile or an asset class or a yield strategy, that would ultimately bring more and more of traditional finance on chain and act as a bridge. Once we started to get the initial product going and pushing it through SEC registration, where we do have one product that's kind of in that phase right now, still going through the process, there was this really interesting moment of, this really could be the future. Can we register a traditional product that has its shares actually minted on chain, and that's basically how you completely oversee and manage ownership of a fund. And that's what was really exciting to our investors, and it's really exciting to us in the direction we're still continuing to push. We did launch this private fund, which is really kind of a companion, if you will, to this registered fund, where we wanted to prove out the technology faster. So a private fund kind of allowed us to get to market more quickly, so where we could really showcase that this does work, that it can be meaningful to the customers who use it, and the success that we've had there will be tenfold once we have a registered product that is more accessible to a wider audience.
Agreed. So we just even taking kind of a step back, right? Why are tokenized assets, why are they so valuable in terms of what are the competitive advantages they have, maybe programmatically, speed, compliance wise? Those are some of the things listed on your site, but what competitive advantages do they have versus a traditional asset, and why should the average person really care?
It's a great question. I think for this one, it's good to kind of maybe focus on the customer, who's actually using this. And at least for the private fund right now, it's more crypto native traders, hedge funds, institutions, those that are familiar with the blockchain ecosystem and cryptocurrencies, and are really looking to diversify their portfolio, diversify their treasury, their balance sheet, or to have a hedge against an existing strategy. What's really great for this tokenized variation here is they're able to hold all these assets kind of together in one place, and they don't have to jump through a ton of hoops to go on and off chain to do this, or to wait for days or weeks to allow for these things to settle. They're able to do it very, very rapidly on chain using their existing workflow and the environment that they're comfortable with. So I think for the customer, it's incredibly valuable for that alone. Just being able to hold and store these assets together with your other assets, and then use them what is allowable and how you see fit. So that's kind of the first order. And then those items that you mentioned as well, just faster settlement, faster transparent reconciliation. These are just wildly efficient game changers for those that are in the blockchain ecosystem. And I think we're going to see even more use cases begin to emerge. We've kind of already seen previously with crypto native assets kind of being used in a variety of DeFi contexts, being very composable, very moldable into functions as collateral or used as pair trades. And I think we hope to allow the products that we're bringing forward to be able to actually be just as composable, or at least close to it, as crypto native assets, so that they can really be a part of that ecosystem and really kind of drive maybe the next wave of adoption in the space.
Mm-hmm. What do you think it's going to take to, make tokenized blockchain assets something that is a mainstream, mainstream? And I know you just mentioned a little bit of that, but do you think that this is kind of the way of the future for assets just in general, or is it just a certain amount? This is a just different way to interact with them. How do you view the future of the space?
Always hard to tell. The crystal ball is always hazy, and I certainly don't have one. So I generally, I would couch all of this with grains of salt. Next week in crypto may change everything. We're in a bull cycle, and bull cycles always generally bring more adoption on chain. New people get excited, they come on. People that have been here for a while get excited again. They start working again and start trying to build something new. So I think this is just a great time, being in the beginnings of some version of a bull cycle. Now, looking into this decade or 10 years out, I do think when I kind of look at what we're building, there will be trillions of dollars of real assets on chain. We'll see just an enormous amount come online. And I think this will ultimately be proven as demand will just point the way. We kind of saw this with Bitcoin ETFs, where once they kind of turned on, just the detractors kind of fell over with the avalanche of demand that kind of was pressed upon. And I think we're going to see something similar when we think about diversification of crypto native users and then crypto agnostic. I think these types of products, these tokenized traditional assets, are a great bridge going both directions. Now, that all being said, there's the consistent narrative of crypto, Web3, blockchain, however you describe it, needs better UX, needs regulatory clarity, institutional liquidity needs to exist to allow for depth and a base. I think those are all generally true. I think we're seeing efforts in those areas with new on-ramps being created, maybe the government's approach starting to maybe soften a little bit, maybe not within the US, but outside of the US, hopefully within the US at some point. And I think also Superstate is really kind of doing this as well to really build products and use cases that work on these problems. But it's going to be gradual, and then suddenly it's going to happen. There's going to be this great moment where there's going to be a TradFi trade by a very recognizable institution that uses a public blockchain, maybe DeFi, and they're gonna use the superpowers of crypto and blockchain, and they're going to be apparent, and they're not ever going to be able to come back. It's going to be too great. They're going to be that settled how quickly. I don't have to spend days reconciling. The fees are clear. I don't have to call someone to know if it really worked. All the massive efficiency gains are just going to be so glaring that I think there's going to be this just moment where there's going to be light bulbs, and then the gradual effect will then kind of suddenly kind of cascade into larger and larger dominoes. But it's going to take time. I generally view a lot of this with the same, through the lens of how slow it was for Wall Street to adopt computers, and have a digital transformation in the 70s and 80s, or how slow ETFs were to be adopted. It wasn't overnight. It took 10, 15 years. So I think that there is generally kind of a time horizon that we have to work within. And I think products like Superstate and others really just provide a great bridge and a lens to what can be, and then allows us to go even further. Ultimately, I think the big questions that are going to be presented to kind of everyone in the space, or even institutions that want to adopt and blockchain and crypto going mainstream, is going to be, is blockchain accepted as a technology, or is it accepted as an alternative marketplace? It's unclear exactly which one, will be chosen. And then coupled with that is, will institutions, or will mainstream adoption really focus on public blockchains or private blockchains? And I don't think that that's very clear either.
So just kind of a bit on a separate topic. So when you're doing, you do investments, you were scouting for Greylock, you still do your own angel investments. What's kind of your approach overall when you look at companies? What are certain key things that that generally help sway a decision for you to invest? And if they're not there, that you don't.
For me, it's definitely an evolving space. My introduction to angel investing was, I think, somewhat common. Friends starting a company, I'll help a friend out. Colleagues starting a company, I worked with them. I understand, trust them to some degree. I'll be a part of it. So it was very organic. And over time, I've kind of more and more tried to focus, on companies that I have some understanding of, or the space or problem that they are entering in, I have some understanding of. Avoid hype cycles. Even though I worked with machine learning within fintech and built some products there, the AI hype cycle is just kind of all over the map. So at this point, I'm kind of well, maybe I'll let other people have fun, and I'll just not really do too much there. But for me, it's really been about, does the problem make sense? Does the founder appear to be, or do I know them to be, someone that will be adaptable and capable of pivoting as needed and listening to the market and the customer well? I think those are kind of the big qualities needed for angel investing, especially angel investings are invested very early stages where, it's unclear, is the problem space really that big? Is the market really that big? Is there really that big of demand? But the founder has grit, the founder is adaptable, the founder is open to being, open to being wrong, but really wants to be right. It has, really strong intuition and drive and grit, a willingness not to give up. I think it can really work out well. For me, when I see that type of person focusing on a problem that I know exists in a space that I have some familiarity with, then I get really excited. I'm like, yes, I know that's a problem. You seem like someone that will be able to actually solve it. Let's see how can I be helpful? And it's kind of what my next question is after that.
It's a good way to look at it. So it has to be in an area that you're already interested about, but then the founder itself is adaptable, and you see that they would pivot kind of towards the right direction if need be. They'll keep going.
Pivot, or even just like find a way to blast through the wall. Like, you know, find where the soft spot is, that no one else has found yet, or just outlast, what the initial headwind is. So yeah, I think it's really about the person and the personality of those starting the companies. And then it's about the problem. Yeah. There does need to be a bit of like also a founder sort of like problem fit. Do they know that space, or are they walking into it completely, blind, have never really thought about it before? If they have some affinity to the problem or to the product or familiarity with it, it's even better.
Mm-hmm. So just the last question I have, Reid, at this phase in your career, you've done a lot of different things. Now you're building a new company and you're really focused on that. But like, what are some of the things that you've aspired to accomplish that you haven't done yet, whether it's more personal or just business overall? Like, what are some short-term and long-term goals in the next 5 to 10 years you hope to accomplish?
Well, a lot of my time is focusing on Superstate. So I think it's really to make Superstate, as successful as possible, to make it, the most efficient, most innovative, most successful asset manager ever. I think that's really the thing that I have in mind. That being said, careers are like products. They don't develop in a linear fashion. You need to adapt to the new demands, new environments, new externalities that you're kind of encountering. And for me, I kind of mentioned at the beginning that I don't like stagnating. I don't like waiting around. So as Superstate really does grow and become bigger and better, I do like variety. So we'll see what that could really mean. It could mean that we just extend Superstate to all kinds of different things. But only time will tell. I think it's really just being open to improving what upon exists, and adapting and changing as needed for your career and for whatever product that you're building.
Yeah, definitely like that. Looking at it like similar way, you got to just be able to adapt and continue to grow and just focus on a growth mindset. So Reid, appreciate you coming on. I think it's awesome, and definitely thankful that you shared your journey so other people can learn from some of the steps that you took. And it's exciting to see what you're building now. I think it's a really innovative idea, and there's a lot of benefits to what you're doing. You're doing a really standardized, structured way that makes sense. And I wish you much success with what's next for Superstate. Thanks for coming on.
Thank you very much, and thank you for having me.